Mercado Libre, the e-commerce giant in Latin America, posted strong fourth quarter results. MELI is the ticker. You're looking at 48% growth in their commerce business, 34% growth in their fintech business. You can see it spread across multiple different countries. This is in US dollars, by the way. You can see their gross merchandise volume, so a core metric for an e-commerce business, showing 40 to 50% growth, depending on what country you're in. Once again, in US dollars, much higher when you're talking about the local currencies. And it's not only growing their e-commerce business, but also growing their fintech solutions, such as Mercado Pago and their credit products, where you can see you have 40% growth on their platform, but even higher growth outside of their platform, where people are using their products outside of their, e-commerce websites. Yet, despite these strong growth figures, you're looking at a stock dropping around 10% today. So in this video, I wanted to dive into, share some of my thoughts about Mercado Libre. I personally own a little bit of Mercado Libre. I'll talk about more about my thoughts on valuation towards the end of this video and sort of walk through why is the stock selling off? Where does it potentially go from here? As well as some of the key attributes that makes it such a strong company. So let's understand, why is it selling off today? If this is your first time tuning in, you're watching Unrivaled Investing. And so looking at the results, look, this is fantastic revenue figures, but, and you're seeing a 42% growth in US dollar, revenue, and an 83% growth in constant currency. But what I think scared some investors was seeing a sharp drop in underlying profitability. You could see the margins dropped, more than half year over year, and then also had a significant dip from the third quarter. Now, management did talk about how a lot of these were one-time expenses, and if you adjust for that, their margins actually would have been much higher. And so we'll talk about that in a second, because these one-off expenses, and this is one that, Wall Street's always sort of like, wait a second, is this actually a one-off expense, or is this, legitimate? Like, this is going to be a recurring expense that you're just saying is a restructuring charge or one-off. In this case, I think you can believe management when they're talking about it being, a one-off, because it's primarily tied to contingent tax liabilities of $350 million, ongoing legal proceedings with the Brazilian Federal Tax Authority. They also talk about a sales tax with Brazil's highest court, and that's another $31 million. So it does really look like it's tied to Brazil, and it's tied to, some sort of tax obligation that, maybe it was nebulous whether or not, this was an amount that actually needed to be paid, or, it doesn't look like this is the type of thing that kills a company. This is the type of thing that it's a one-time bump in the road in all likelihood. You don't want to see this keep coming up. But overall, when management paints this picture, they're showing, here's what the reported margin is of 5.6 versus 11.6. But you do need to, exclude these one-off expenses in terms of the cost of sales and their operating expenses. And adjusting for that, their margins actually should continue to show steady improvement over time, from around 11% last year to around 13% this year. And you could see, marching higher for the full year, it actually would have been closer to 15%. So that is what investors, like to see, that steady margin improvement. And that 15%, remember that figure, because we're going to talk more about that in just a bit. So another key aspect looking at Mercado Libre is, you're talking about strong growth, strong headline growth in commerce, fintech business. But they did talk about, I think this is a key aspect on why Wall Street's sort of, not exactly thrilled by these results, seeing the stock down 10% today. So they talk about this growth in commerce was boosted by a step up in first-party product sales, and the latter, talking about fintech, was supported by a pickup in credit revenues. So, and you could see that in their gross margin for the quarter was actually down year over year. And so the reason why Wall Street's a little skeptical of this, and this is, based on my own personal experience working on Wall Street, multi-billion-dollar hedge fund, is, there are types of revenues that you like to see, and there are types of revenues you don't like to see. And the concern, and I'm not saying they're doing this, but the concern that investors need to consider is, when you have an e-commerce platform and you do first-party product sales, that means you're taking the inventory and then you're selling it yourself. The reason why they're doing that is because they want to make sure they have a fantastic lineup of products for customers to buy. And they want to make sure customers can easily get at the best pricing. But the trade-off is, you're generally looking at a much lower margin business. So they're saying, hey, that's the type of business that's been growing, their results, where they're taking on the inventory risk. They're taking on a much lower margin revenue. And then the second part where they talk about it was supported by credit revenue. So i.e. offering credit to their customers. So this also makes, Wall Street nervous. It's like, wait a second. So your revenue is not only lower margin, but in order to drive that revenue, you're effectively financing your consumer. So if you are not sure about management's quality or caliber, that could be the path of destruction, where you see this sort of financing, using financing to fund to fund very low margin revenue. And that's ultimately not what you want to see from a business. But we'll talk more about that in a bit in this video. Personally, the reason why I can stomach that is because you're looking at a founder, CEO, chairman that has been with the business, since the beginning. He's looking to build for the long haul. And that's personally what I'm looking for with my own personal investment journey. I'm looking to find things I can own for the long haul. And so, I'm less concerned about that when you have founders with skin in the game, which you do here with Mercado Libre. But this is why Wall Street, when you say, hey, our growth was driven by the two things that Wall Street doesn't like, that is worth calling out. And looking at their gross margins, you see gross margins did take a dip, year over year, which is not only because of this change from third-party revenue. Now, third-party revenue is much higher margin. That's you're not taking the inventory. You're just getting effectively a commission from someone else selling goods on your platform. That is the dream. That's super high margin, especially when those merchants are spending money on advertising. And inch by inch, their advertising business is growing very quickly. That'll be very lucrative and high margin for them over time. And so, looking at this, you not only have the impact from the greater first party sales, but also the investment in logistics, where they're saying we are making investments in both Brazil and Mexico to improve their fulfillment network. And they also including their sales tax. So including a bunch of different things that were impacting their results. Personally, I like seeing that they're making these logistics and fulfillment investments. They're talking about how fulfillment reached a new record of almost 50% of the shipments, going through their fulfillment platform. This is the type of thing that makes you unrivaled when you own not only the e-commerce platform, but also the distribution as well, because then you control the consumer experience. And, management's quick to call out that, a very high degree, I think it's over 52% of their, shipments were same day or next day delivery. So that is what, this is how you make customers happy. And it goes back to the Jeff Bezos comment of, someone once asked him, founder of Amazon, what's going to change in the next decade? And he goes, that's super hard to tell. I'd argue it's even harder now with the AI revolution that's going on, how fast things are changing. So instead, you want to focus on what's not going to change. And, this is, paraphrasing Jeff Bezos, what's not going to change is that consumers aren't going to want their packages to take longer. Consumers aren't going to want their packages to cost more. And so when I see the initiatives that Mercado Libre is taking, they're doing the things to be unrivaled. They're saying, hey, we are going to make sure we have the inventory, a broad selection. Do customers want a limited selection or a broad selection? Okay, they're going to want a broad selection. Okay, are they going to want low prices or high prices? They're going to want low prices. They're going to want it, that day or next day, or are they going to want it next week? They're going to want it that day or next day. So they're doing the investments that make it, that where the consumer is going to like it. They're increasing their value proposition, making it more and more of an unrivaled company. This is what I like to see, even if it means, an impact in terms of their margins. So I check in with AI Ticker Chat to review this latest press release to see, are there any other, shareholder concerns? And I said, hey, list out the potential shareholder concerns. I want to make sure I'm not missing something here. And I'm oftentimes using AI Ticker Chat to sort of interact with the documents, see what management may have said over the past year or so. And so here it is. And keep in mind, first month is free, and see the link below. Calling out the different items. One is the legal and tax contingencies. I already called that out. I really view that sort of as a bump in the road. Another is doubtful accounts, potentially, around collection of receivables. Let's talk about that in just a second. Another is foreign exchange losses, partly due to their Argentinian operations. I'm less concerned about this because I like to see the leadership change up that we've seen in Argentina, MELI. I find this to be very interesting. And so, yeah, if you can get get inflation, hyperinflation under control, maybe this can be a renaissance in Argentina. We'll see. So then next up is the investment in their first party business. Already talked about that. Investment in fulfillment. Yeah, these are part of the reason why margins took a hit, but overall I'm not really worried about it because they're thinking about it from the long run. So looking at it, that really just leaves this doubtful accounts. So let's review that item. And so here it is. Management does a good job showing, look, here's sort of what our credit portfolio looks like. And they frame it as, let's say credits that are past due 15 to 90 days. They did tweak it previously. It was just past due up to 90 days or greater than 90 days. But it is important that sometimes people just forget. And so they're tweaking it a bit to show the 15 to 90 days. And it does show that by and large, the past due is actually declining as a percentage of their portfolio, and that their coverage in terms of, depending on how delayed, if it's 90 days past due, you're probably gonna, have some sort of loss on that loan. So what they're saying is our reserves, our allowances for doubtful accounts for greater than 90 days, we covered 153%. So this does suggest that they're doing conservative, reserving against this loan book, against their credit book. So this is important to understand in terms of, from an investment perspective. Broadly, I'd like to see these metrics seem to be heading in the right direction. It's something to watch out for because of this risk of, hey, you're financing your own e-commerce platform. So that is something to monitor. So where does Mercado Libre go from here? First of all, in full disclosure, this is not financial advice. And also in full disclosure, I do own some Mercado Libre stock, MELI. And so also quick plug, recently, an Unrivaled investing subscriber posted in our exclusive Discord that, this is a direct quote, "I've recently paid my second annual subscription and couldn't be happier. I've profited enough already to cover the next 20 years of subscriptions." It's not hyperbole. I actually did the math. My goal with Unrivaled Investing is to help as many folks as I can, sharing compelling ideas. I'm trying to keep the subscription price as affordable as possible for as many people as possible, but I do expect to be raising the price later this year. So that is something for folks to keep in mind. And also, I do try to reward loyalty, where if you subscribe, you're locked in at that favorable rate. And each year I do expect to raise prices over time. So thinking about Mercado Libre, this business it's a beast. I mean, you've got so many different pieces going on here. You not only have their e-commerce platform, which is crushing it. You can see some of the key metrics, the gross merchandise value growing by 80% and, in constant currency, their payment volumes, both on and off platform. I mean, off platform's just growing bananas. Their acquiring business, so merchant acquiring, that's also growing well. And that's across, a bunch of different countries in Latin America, Mexico, Brazil, Argentina. You have their credit portfolio, which includes loans to merchants, which includes credit card loans. So you have a fintech business, the Mercado Pago, which accepts payments, and you get a cut from those payments. You get a loan portfolio, you have e-commerce, you have ad revenue. There are a lot of different pieces to figure out here. So it is a little bit tricky, but to take a step back, one of the things that gives me comfort is knowing that you have, and this is one of the key things I look for with my own portfolio. And this is a way of getting alignment. This is a way of sleeping better at night. Not everyone needs this, but for me, this is how I like to roll with my own personal portfolio, is saying, hey, you can always do so much work. You can always do more work. But ultimately, the big pieces are alignment, where you say, hey, does management own a lot of stock? Or is this a founder-led business? That's what I really love to see. Most of my portfolio, I believe, is founder-led type of situations where there's just huge skin in the game. And so here it is. You see the co-founder, chairman, CEO, Marco Scalperin. His family trust owns, nearly 8% of the company. I like to see this. This gives me a little more comfort that they're going to focus on building for the long haul. And the investments that they're making arguably reflect that they are investing for the long haul, investing in first-party inventory, investing in making sure their fulfillment network is fantastic, investing in, credit products that consumers might want, investing in lots of different things that, suggest they're focusing not on next quarter, but on the next decade. And that's what I like to see. And that comes partly from this ownership mentality. Now, I also like to see that they're generating lots of free cash flow. In the most recent quarter, they generated plenty. And looking at it on a year perspective, even after investing in their loan portfolio, which I think is the appropriate way to do it, they grew their free cash flow. Their free cash flow was $2.6 billion in 2023. So in the quarter, it was very sizable. In the year, it was around $3 billion, which, for a business that's trading at an $83 billion market cap, a $1,600 share price, that's actually not crazy expensive. That means you're effectively trading around 30 times free cash flow, give or take. Not bad. Now, keep in mind that free cash flow is going to be bumpy because it includes some working capital changes. The question is, what do you think the margins for Mercado Libre should be? I'm penciling out between 15 and 20%. They've shown that they could do that. And I'm also penciling out around 20% growth over the next few years. I'm penciling out closer to 30% growth this next year. And I'm saying between 20 and 30 times earnings multiple. Maybe that's too conservative on the downside. I partly figure that, maybe because of foreign currency risks, it's appropriate to have a lower multiple. Looking at these different things, 20% profit margins, which is much higher than the 5% in the most recent quarter. Now, keep in mind, adjusted, it was closer to like 13, 14%. But still, 20% is above where it's currently at. 22% is a bit of a growth slowdown. So maybe that's too conservative. I'm assuming 35% growth next year. So, looking at these different pieces. And then a 30 times multiple, effectively 5 years from now, that gets you to around 100% upside over the next 5 years. Factor in the cash accruing to you as a shareholder. Maybe you're talking about, a high teens type of return. That's part of the reason why I own this. I like this. I think it's an unrivaled business. But I also think it's possible that it's not the most compelling type of setup that I've seen. And I've called out 2 other Latin American stocks to my subscribers that I've actually bought in the last few months, one in the last few weeks, where I just think that there's significantly more upside. And you also have that founder-led business, and it's also profitable. So, it's everyone's going to have their own journey. So I own Mercado Libre, but I also look at this 10% sell-off, and I think investors sort of know it's an exceptional company, and it's being priced. Let's just go back to this point. You have to assume that over the next 5 years, they're going to grow faster than 35% next year, or 22.5% in the following years, greater than a 30 times multiple, or greater than 20% profit margins to get more than 100% upside over the next 5 years. Maybe they do that. I hope they do as a shareholder, but it's important to recognize that, how do you want to position your own personal portfolio? For me personally, I want my largest positions to be in situations where hopefully I don't lose money. That's obviously the goal. That's rule number 1, as Ben Graham says, don't lose money. Rule number 2, don't forget rule number 1. But the second aspect is to consider, okay, well, what are the situations where I can conservatively pencil out a reasonable return and still get at, a very satisfactory result, 100, 200% type of upside, even assuming, execution that you think management's going to surpass. So that's the type of situation where you think, hey, I'm penciling out 100 to 200% upside, and maybe they do even better. Maybe they really beat my expectations. We'll see. And so that's the type of thing that I personally want to, make larger positions. That said, I do own Mercado Libre because I think it is an unrivaled company, and I would like to buy more. So if people are watching this video and saying, it's an unrivaled company, I'm just going to sell this down, I guess please do so, because I'll be talking to my community at Unrivaled and Unrivaled Investing, and at some point we'll be buying more. So I hope this video has been helpful for you talking about Mercado Libre. Please make a point of hitting that thumbs up, hit that subscribe button. Thanks so much for tuning in.